Hey everyone, welcome back to another episode of AWM Insights. Justin Dyer here, CIO, Chief Investment Officer, that is, of AWM Capital. Happy to be here, happy to talk about a pretty interesting topic with Mena, Hanna, Portfolio Manager here at AWM Capital, and my co-host on Insights, as you all very well know. And that topic, Mena, is sports as an asset class. You know, if you're not familiar with what I just said, sports as an asset class, it's probably just a matter of time. There's a lot of headlines, and certainly if you're paying attention to financial media around this, NFL being a big one, allowing private equity to come in and become more of an owner, more meaningful of an owner of those franchises. And then there's, you know, a whole swath of adjacent type investments around this idea of sports as an asset class. So it's a topic that keeps coming up and I think drives attention for a variety of reasons. You know, a lot of people are sports fans and you want to own part of your team, and sometimes there's a public option, or very few examples of that, but there are some publicly traded teams. And in any case, so we're going to start the conversation today focused more, starting it with more of what the lay of the land is, and then give you at least a quick take of how we're thinking about this. You know, it's a big topic. We could probably do a couple episodes on this, and maybe we'll do that down the road. But I guess, Mena, why don't you take it away and paint the picture of sports as an asset class? What does that actually mean?
Yeah, it's looking at sports as an investment, whether it be for pure financial benefit or for something that's a little bit more. Maybe you want to look at investing in the Los Angeles Lakers and keeping them in your name because they're a trophy asset. They're the team that you rooted for and supported your entire life. So there's a few ways of kind of looking at it. The two main paths that I would take are a financial asset, which is a true asset class like what you're talking about, or a trophy asset where we're going to set a lower bar. Potentially, I'm going to take on more of an operational role. It's going to be a little bit of a headache, but it's something that I want to do because I want to own the team. I want to participate in the team's decision making, ideally drive them forward. And it is just different from how you would, you know, obviously buy shares of Meta or Google or Apple. It's a different level of ownership.
Yeah, right. And we're not going to get in to great detail today on the avenues. I mentioned private equity. You can obviously take that direction. You could, if you have enough money, you could own a team directly. That's kind of out of the scope of what we want to talk about today. What we're focused primarily, like I said, is kind of high level, top down. So you set us up really well there. I would then take it a step further and almost define what those two categories that you presented could then be, right? You could have established teams. So, you know, think about the major sports leagues, right? MLB, NBA, NFL, you know, hockey is debatable.
Very debatable.
Very debatable. But, right, those are these established leagues. And there is probably more of that trophy seeking aspect, I would argue, there. And the prices are substantial. And so we'll get into kind of where we go from here given that. But there's a lot of hype, let's call it, around those big names. And then you have what I would call kind of a middle ground. You know, you could still call them emerging leagues, franchises. But there's some that are more mature throughout that journey. So think about the WNBA, right? Everyone probably knows what that is, has watched a WNBA game. A lot of people we talk to have even gone to a WNBA game and have some really good things to say about that. You know, kind of behind that is women's soccer. That's certainly a global sport, right? It's becoming quite popular here in the United States. It's becoming, or has been, popular in places like Europe. And then taking a kind of a bigger step down from there, the true emerging sports leagues and franchises are, you know, the track and fields of the world. I would even put pickleball in there. Women's volleyball, I think, is coming up hot and heavy as well. And then there's some more esoteric type things like SailGP. You know, that that's an emerging sport for sure, but it's been around for quite some time, and it's kind of just changed its shape and form. And each one of these has different investment profiles, different risk profiles, but really at the end of the day, we're talking about different investment profiles.
Yeah, and even in like the big leagues, talk about the NBA, there is a massive difference between valuations of, call it the big market teams and the small market teams. Two teams in California, the Lakers and the Kings. Like the Lakers are worth on paper 4 to 5 times as much, which shows you that it doesn't just depend on what league you're investing in. It's also what market are you buying into, and how are you potentially going to unlock value if you do buy a small market team? Like, what is the play there? You're limited by your fan base. You're limited by the income of the area that you're actually operating in. Do you move the team? Do you try to figure something else out? It's a completely different game from an investment standpoint, and you do get just massive differences in valuations based on where the team is located and historically how the team has done.
Yeah, I mean, it's a great point, right? Within any asset class, there's so much nuance and so many different drivers of return. It's just a great reminder. I don't want to forget to mention these kind of, call it tangential asset classes to this general topic, which are things like the sports ecosystem. So technology that goes into sports or might be supporting teams, stadiums, et cetera, right? Those are really, really important also to talk about. Not really going to dive into them a ton today, but then even further down the ecosystem, a term and some money that I'm seeing go into supporting is youth sports as well. We all know, Lord knows, that that's a huge, huge market. I've got kids and spend plenty of money on youth sports, but then it's becoming big business as well. So those are two categories just adjacent to what we're talking about today. We're going to focus again more so on these major teams, team ownership, and really, Mena, let's jump into kind of our high level expectation, right? Like just category by category. Again, to your point, there's nuance between the big market teams and the small market teams and whatnot. And there's obviously corresponding risk that comes into those equations. But let's just talk a little bit about how we think about the investment opportunity set across this asset class.
Yeah, and something that kind of reigns true, and this is actually something that gets pitched when people talk about youth sports all the time, is sports, if you're including them in your portfolio, it's for diversification purposes. You're probably going to pay for your kids' soccer camps, even if we're in a recession. If we hit, a 2008, you're probably going to pay for it. So that actually also bleeds its way into sports in general. A lot of people that are selling these products or ownership into these funds that are buying sports teams are pitching it as a recession-proofed asset class. And I think that reigns true across the board. But if you look at the major sports, like if you're kind of looking at these mega cap teams, the Dallas Cowboys, the Lakers, just the biggest teams, like, yeah, that might be true. But there's also women's sports teams or the NHL, which just have less traction, which are going to be a little bit more sensitive to things. Now, their rates of return and where you can actually capture a significant financial outcome, that's probably where you're going to end up wanting to invest, because so much money is poured into those big leagues and the big teams that the valuations are kind of sky high already. But there's different risk factors that come into all of these asset classes. And then I would argue that there's also no-go zones, which are like the third tier English team. We see this actually a surprising amount.
Soccer teams,
yeah, soccer teams, where they're bleeding a ton of money. And unless you're Ryan Reynolds, you have no business investing in these teams, because you're just going to hold them until they go under. And yeah, it's a losing strategy.
Yeah, well, I mean, you mentioned a couple things that I want to bring into one clear point, where I think a lot of the coverage on this and the interest here is hype driven, right? You see Ryan Reynolds turn around that football club in the UK. You see some of these legacy families, the Lakers just sold somewhat recently, and the numbers are substantial. And so there's an element of hype. And rule of thumb, hopefully, if you're listening to this podcast on a regular basis, you generally know or hear us talk about, hey, stay away from hype trades. They're generally not a good investment strategy. But it's also one of those things the devil's in the details, right? You take the Lakers as a great example, sold for, what was it, $11 billion. And, we can play with some numbers here, so I'll put an asterisk by this, but you look at what the initial buy-in price was and then what they sold for. Now there's nuance to that. I think they sold some real estate property along the way, but that rate of return actually barely kept up with the S&P 500 over the hold period. And so, yeah, you see these billion-dollar numbers, and there's single families that exit at that number, and that's impressive. But the tried and true kind of public market equivalent, easy thing without the operational burden and all that good stuff, actually would have kept up or put you in the exact same position. The other thing I want to hit on too is evaluation. Like, it is from a established sport, established franchise point of view, these entry points are just really, really hard to wrap around my head around and get excited about. Yeah, could they still have a positive return from here? For sure. But are they gonna double, triple, quadruple, which I think a lot of investors are kind of hoping for in some cases? I think the odds are against those type of outcomes, just solely because of the entry prices of some of these things.
Yeah, unless you're able to unlock, think about it. The software can 5x, a software company can 5x, because you can create a new product, you can find another stream of revenue. What you're saying is spot on, because if you're investing in the Lakers, what are you going to do? You're already international. You've already gone international. You're already probably in youth leagues. You're doing a lot of things. You're just going to get a little bit of just revenue expansion as people make more money, as the economy does better. But yeah, you're not going to 5x from here with a mature team like that. Yeah,
now it's a great comment to dovetail into the other sports, right? What you're talking about is really market share, and we've been in and we continue to exist in a world where everyone's attention is being split in multiple different ways. Now, sports really benefits, I think, from the desire to be in person and get away from some of that. But then there's also so much bifurcation in everyone's interests, right? The monoculture that used to exist when I was a kid is no longer there. You can be obsessed with whatever, obscure football league in South America, and I could have no idea that exists. And there's a super strong fan base on something like that. And so the established teams have all of these up and comers to contend with. And I think that's where you're seeing some of this growth, and that's where the bet is. Now, there's a lot of risk and potential return, but I would argue, at least where we stand, is the more common sports like women's basketball, women's soccer, those are places where we've actually put some dollars behind, because there's a little bit more predictability. There's a lot of upside through, again, capturing more of these eyeballs away, either net new eyeballs that weren't necessarily huge sports fans to begin with, but then also competing with these more established leagues. And they're like, hey, I can actually resonate more with women's basketball, women's soccer, et cetera, et cetera. So there's a lot of interesting societal dynamics at play that are creating a general tailwind for up and coming sports and sports in general. But then like we talked about, the hurdle that these established teams and whatnot have to get over from these valuations today is pretty dang high.
You have to find something that's legitimate, that's not going to go under like the XFL once you hit a speed bump, but it's juice. It hasn't been completely juiced. It's not just a dried lemon at this point and completely gone, and you're left with nothing. So yeah, it's an interesting, delicate balance that you have to play to make it worth it.
It is. And hey, but that's why we invest, right? There's risks to this, and we sit and digest all the data and thoughtfully make make investments accordingly. But yeah, anyway, hopefully this conversation is interesting. Again, very, very high level. If you have any specific questions around the general topic, shoot me in a text.
626-862-0355.
And we'll keep the conversation going. We'll unpack this as much as we need to. But until then, until next time, own your wealth, make an impact, and always be a pro. Thanks for listening.